Hello, everyone. My name is Zulfiqar, and welcome to Income Investors. With me today is John Whitefoot. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to incomeinvestors.com. While you're there, you could also sign up for some free reports that we offer, and they get delivered to your inbox directly. Wall Street analysts are running to lead the pack on touting the best artificial intelligence stocks. In the first and second quarter of this year, the highest number of S&P 500 companies mentioned the word AI on their earnings calls in 10 years. The term generative AI, which is essentially the backbone of AI tools like ChatGPT, is gaining traction too. Unfortunately, all that hype should be followed by some caution. Companies left and right, new and old, will be touting their AI technology and how it will revolutionize the world. As we enter in the early stages of AI and generative AI platform, it's a good idea to look at a company that has been at the forefront of emerging technology. And that's International Business Machine, traded on New York Stock Exchange under symbol IBM. It's very well known as IBM or Big Blue. IBM is synonymous with emerging technology, from inventing the computer, floppy disk, hard drive, automated teller machines, Deep Blue, and Watson. In fact, when it comes to innovation and AI, few have the lineage that IBM does. John?
You're absolutely correct, Mo. In fact, we actually last looked at IBM in early June when it was trading at $132.24 per share. Since then, IBM stock has rallied an impressive 14.5%. Over the same time frame, the S&P has recorded, a modest 3.8% gain. Better still, IBM provides a big growing dividend. In fact, few companies have the lineage that IBM does when it comes to returning value to shareholders through dividends. It's paid a quarterly dividend every year since 1916. That's 434 quarters and counting. Most recently, in July, it announced a quarterly distribution of $1.66 per share. That works out to $6.64 per share on an annual basis for a yield of 4.5%. IBM also has raised its dividend for 20 consecutive years.
Point out one more thing, that in the technology sector, you don't really see a lot of companies paying out dividends like IBM does. And IBM, if I look at it, I consider it like a blue chip stock that has, provided some strong income over years. But now let's switch gears a little bit. If you want to recap a little bit what IBM is known for.
Yeah, IBM is one of the largest IT services companies. It's the dominant provider of mainframes and a leader in the public cloud, AI, software, and data management services. The company has a roster of roughly 80,000 business partners to service 5,200 clients, which includes 95% of all Fortune 500 companies. Now, even though IBM is a business-to-business company, its outward reach is massive. For example, IBM manages 90% of all credit card transactions globally and is responsible for 50% of all wireless connections in the world.
And if you could elaborate a little bit about their AI.
Yeah, on one hand, IBM is content to let Google, Microsoft, and OpenAI create their own chatbot. Instead, IBM's strategy is to help its customers harvest their own personal valuable data and create their own AI applications. For example, IBM is helping a bank develop better compliance and audit data, and it's also working with NASA to improve its weather modeling. It will need a lot of different AI models to keep up with the pace of innovation too. That's partially why it has announced 7 acquisitions this year alone to bolster its hybrid cloud and AI strategy.
Dig into the fun stuff. How did this company do in the second quarter of this year?
IBM announced that revenue for the second quarter actually slipped 0.4% to $15.5 billion. On the other hand, net cash flow from operating activities increased to $2.6 billion, while free cash flow was flat at around $2.1 billion. IBM ended the second quarter with $16.3 billion of cash and marketable securities. Now that's up significantly from $7.5 billion at the year end 2022. Now, going forward for the back half of the year, IBM expects to report constant currency revenue growth of 3% to 5% and about $10.5 billion in free cash flow. Now that's up more than $1 billion from a year ago.
John, you've touched on their dividends, but now let's talk about how is IBM stock doing overall.
When we last looked at IBM back in June, its share price wasn't exactly, thumping the market. It was actually down 3.5% year to date. NVIDIA stock was up 162% year to date, followed by Alphabet at 44% and Microsoft at 40%. Now, fast forward 3 months, and IBM stock is up roughly 11% year to date. Not as much as its peers, but it's certainly on a different trajectory. And the outlook for IBM is even more bullish. On September 20th, RBC Capital Markets initiated coverage on IBM with an outperform, which is a buy rating. Analysts set a price target of $188 per share. Now that's up roughly 28% from current levels. Now, analysts said, to justify it, they said that the tech giant software was misunderstood and undervalued, especially with its role in AI. The target is also a lot higher than the $162 price target analysts were calling for back in June. And even with that bullish call, IBM is still trading at a bargain with a forward PE of 14.3. By comparison, NVIDIA has a forward PE of 41.1. Alphabet is at 20.75 and Microsoft is at 29.5.
All right, John, thank you so much for your analysis. A lot has changed with IBM share price since we last looked at it in June, but our outlook for IBM remains the same. Data is transforming every aspect of how we live, and as enterprises seek to integrate and analyze large volume of data for insights, they're turning to AI. And IBM is synonymous with developing tech such as AI, machine learning, and deep learning. It's actually been working on AI applications for at least 40 years. It's reporting strong financial results, and because of its growth expectations and free cash flow generation, this company is well positioned to continue returning value to shareholders through dividends. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.